Good morning, everybody. It is October 31st, 2023, 8:46 a.m. My hair is looking a little spooky because it's Halloween. Dude, this week has been so crazy. This weekend has been so crazy that I forgot today was Halloween. But we are here. It is indeed Halloween. I really wish I could have had an outfit for you guys because that would have been fun to do. But just given the nature of everything that has happened over the weekend, it's been hard to be able to get an outfit. So I guess you're going to have to deal with me and my scary hair giving you my outfit today as in the market open. Tuesday, October 31st, last day of October. So this is going to be a fun market open because I just got back from Vegas. I got back 3 hours ago. Now, I was supposed to come back from Vegas on 11 p.m. on Monday, October 30th. We get on the flight yesterday at at 2 p.m. We're on the flight for 35 minutes. And then the people on the flight, they're like, hey, the engine's a little iffy right now. So you got to give us a little bit more time. So we stay on for another 30 minutes. And in my head, I was just like, of course this is happening. Why wouldn't this be happening? It was a direct flight from Las Vegas to New Jersey. It's been 4 days. I was in Las Vegas. Didn't sleep for the past 24 hours on Monday, because of just everything that was going on Sunday night. So it's like, all right, time to just go home, sleep by 11 p.m. That's when I would get home last night, get ready for starting the day. Then they delayed the flight. They're like, all right, instead of going to New Jersey, we're going to have you do a connecting flight to Denver, which is going to leave 4 hours later. You're going to get to Denver at 11 p.m. Then you're going to take a red eye from Denver at 12 a.m. back to New Jersey, and you're going to get there at 5:30 a.m. So I basically, which is why you can probably hear it in my voice, have not slept over the past 2 days. I think I got about 4 hours in between the 1 hour on the first flight and maybe 2 hours, 2.5 hours on the second flight. But we're here. We are here and excited to still be here. Thank you all for being here. Vegas was awesome. Got to meet a lot of people. Got to have a lot of fun. But nothing stops the show. That is the biggest thing that I'm starting to learn as I'm doing this market open, is like, this show is part of my blood. It's part of my soul. No one is more important than this market open. This market open is everything, and nothing stops the mother effing show at all. I don't care if I have 4 hours of sleep. I don't care if I have 1 hour of sleep. I don't care if I don't care if I'm dying. Like, the market open is the market open, and the open of the market must be open. So the market must be open. We are here to start the market open, and this good old cowbell that we've missed is back in action as well. All right, let's get into the market open because we got a bunch of stuff to discuss today. Robert Sanchez, Mr. Samore Duck, Hakan Liu, Seth Roth, Miss Yager, Yeti, Stevie Stone, Felicia, Bryant Robertson, Joseph Villegas, Miami Ren, Roy Dominic. I missed all of you guys. Thank you for being here. Ty Gordon, Palantir Research, what's up? Jager Float, Timmy, Sanjay, it's been too long. Morning a minute, everyone. And that's the thing, bro. It's been too long. I noticed this weekend was really important for me to have a realization. I cannot live without posting content on YouTube. It's been like 5 days since I uploaded a real video, and I probably won't upload one today because I'm gonna knock out for like the next 10 hours after this market open and get a little bit of sleep. But like, yeah, I hate these like little vacation trips. This is the first vacation I think I've ever had or at least in like 2-3 years, but I hated it for missing work. From a missing work perspective, it's not fun. Timmy Garcia, why was the picture taken in the men's dunnies? Because I was at the airport. I was like, all right, this is the picture we're taking. Triple Cheese, Dr. Gonzo, Ricardo, Long of Tan, I get paid to wait, Broccoli, Bob, Damien. All right. Thank you all for being here. It is time to once again open the markets, running off 4 hours of sleep because the show must go on. Nothing stops the show. So we have a lot of earnings today, and I think we'll start off with that. We have a bunch of companies that have reported earnings, and we have some companies that reported earnings yesterday that I think were interesting and that I wanted to take a look at. And some of these companies are not doing that well in the context of earnings. So Apple had an event yesterday. SoFi had earnings. Pinterest had earnings. Let's just run through a bunch of these and things I want to discuss. I mean, we talked about SoFi yesterday, so we don't have to go in depth on SoFi. The funny thing about SoFi is that SoFi had a 14% gain, and then SoFi fell, and it's down 1%. I think today in the pre-market, this up just a little bit. So SoFi was at like almost $8, then it went down to $6.40, which is, of course, that would happen. SoFi right now, $7.05, up about 2% in the pre-markets. BP is down 4% after their third quarter profits have plummeted. Oil major BP reported a sharp annual decline in profits to $3.29 billion, down from $8 billion. That's a big one. $3.2 billion in profits, down from $8.15 billion. Not really the best thing in the world to have. I don't follow BP that intensely, so I don't know why they lost that much money. But there had to be something that was tough. Analysts had expected profit to come in at $4.05 billion, so they missed on that. Shares were down about 4% after hours. So definitely not good for BP. We saw Exxon the other day have a decent earnings, even though their profits declined as well. So we're seeing a lot of oil companies miss on some of those profits, but that was necessarily not the best for BP. In its outlook, BP said it expected production restrictions from members of the organization of its petroleum exporting countries and demand rebound to support oil prices. It also anticipates industry refining margins will be significantly lower in the fourth quarter. If we look at some of these oil prices right now, and see where we're at. We're up 1% of the day, $88.37. For the past 5 days, up about 0.30. For the past month, down 2.5%. So basically, if we look at October is over, right? So this is the last day of October. We have never gone below $84.07 a barrel. And for the far majority of October, we were in this 90 to or 88 to kind of 91-ish range. And so CPI on October are probably going to see a little bit of I mean, not necessarily more than September in terms of how energy was, because, in September it was like 94, 95, but it is going to play a pivotal part in CPI in determining where energy would be. Happy Halloween, FR310. Happy Halloween to you. Now, speaking of energy, Tesla has taken a little bit of a tumble as well. Yesterday, I didn't notice, or actually, I think after the market open ended, Tesla went below $200. Okay. Tesla went down. And one of the reasons why Tesla went down that is important to pull up here, and I guess this was kind of the reason why Tesla went down, is a Panasonic battery deal that is affecting this company. So I read this morning. Tesla share dropped 5% on Panasonic battery warning, down 18% since Q3 earnings report. So here we go. Okay. Tesla declined nearly 5% on Monday news following the news that Panasonic, a longtime partner and supplier to the EV maker, had reduced battery cell production in Japan during the period ending September 2023. This update stoked investor concerns about softening demand for EVs. This demand problem has been kind of a concern for many of these EV investors, especially for high-priced EVs that may not qualify for tax breaks or other incentives from government programs. Panasonic is a major supplier to Tesla. I don't think this news is necessarily indicative of the fact that Tesla's demand is falling off a cliff or anything like that, but it definitely isn't helpful for Tesla investors that are already in a pretty tough situation. Tesla CEO lamented, "We dug our own grave with the Cybertruck. I just want to temper expectations for Cybertruck. It's a great product, but financially it will take about a year to 18 months before it is a significant positive cash flow contributor." Now, the bears are pretty happy right now, if you've been a Tesla bear, seeing some of this price action, because your argument has basically been, look, interest rates are not going to be able to be sustainable with massive amounts of demand for a product that still costs a decent amount of money, even though the price cuts have been aggressive enough to make it competitive against the Toyota and Honda Civics of the world. And as a result of that, people will not buy as many Teslas, and Tesla's earnings will suffer. That narrative seems to be playing out in some extent, at least from a stock price perspective, but also from a supply chain OEM perspective in terms of Panasonic as the battery maker that maybe is not needing as much production in Japan if they don't need to create that many batteries for that many cars, because there's not that many people buying those cars, or at least that many people buying the same amount of cars. And so that narrative is what the bears will point to. I personally don't really think that's the narrative, even though that's a logical narrative in my opinion. It's not an illogical narrative. I just think this macro is like insane. I personally think this macro is in a very tough situation right now. To see a company like SoFi go up 14% in the day on a triple beat, 717,000 members, $2.9 billion in deposits. We also had the student loan origination almost at $1 billion and $995 million, revenue growth of 27% year over year. For them to not be able to sustain their earnings and for them to drop, that means this is a tough macro. Imagine if SoFi had a bad earnings. And so it creates a lot of pent up demand, in my opinion, because we know the earnings were good. The stock's still down. So there should be enough buying pressure eventually for when the stock goes up for it to really go up. But it's also like, well, how perfect does a company have to be, right? Like, how perfect does Tesla have to be? How perfect does Enphase have to be for them to not get just absolutely destroyed. Speaking of perfect companies, Palantir, which is not the most perfect company in the world. How perfect do they have to be on earnings in 2 days? We'll be live on this channel November 2nd, 7 a.m. Arnie will be joining me as well, and I think we'll have someone else, but we'll be live on this channel. How perfect do they have to be for the market to not destroy them in the context of their share price? And we're going to ultimately see. End phase right now, $78.60. It's down a little bit in the pre-market. Tesla down 195. Uber's up. McDonald's up. S&P 500 416.22. Still below that 200-day moving average, under 420. So we're in a little bit of a range for the S&P, and that 10 years at 4.8 today. It is down a little bit from yesterday, but that is at a elevated level that is, I think, still worrying investors in terms of the equity markets for investing in equities versus money market funds. PayPal, 51.30. They have earnings soon. Robinhood, $9.08. Verizon, 34.62. Verizon actually up about 10% over the past couple of days. Google, 125. Amazon, 132. Amazon sustaining a little bit of their earnings bump. A lot of these companies have good earnings, but these companies didn't have good earnings enough for the market to continue to give them their premium. SoFi missed gap and wrote off $200 million on paper. They didn't disclose that's what it was. I think, yeah, I mean, I don't know if gap profits or lack of gap profits is the reason for why the market tanked them, because we knew that was coming. It's not like we expected it this quarter and it didn't come. If we don't get it next quarter, yeah, the market's going to tank them 100%. And they have to have a really good reason why they don't become gap profitable next quarter. But 717,000 people joining your product, $2.9 billion in deposits. It's just ridiculous. Good morning, Amit, or is this Amit's AI brother who doesn't sleep? This is Amit, and Amit has not slept at all, and I kind of love it. It's a fun little, it's a competition of like, can you actually do this market open without having slept? It's like, I was on the airplane just landing. I was like, dude, yo, isn't it one of the scariest situations on the airplane when it lands? And like, you guys know what I'm talking about when you land. We'll talk about Pinterest in a second. When you land and like the wheels finally touch the ground and they're on the ground, but like the plane has to slow down now. Like the amount of physics that's required as soon as the plane touches the ground, right, and it's on the runway, you kind of feel like it's just going so fast and like it's about to crash into something. But then eventually like it cools off and then it just like slowly recovers. That's a scary moment every time the plane lands, because you're always just like, what if like the physics go wrong and they don't figure out how to properly just like slow it down on that runway. Now, obviously, outside of a few crashes a year, like I don't think that's how planes really crash. The runway thing they've always solved, but it's always interesting once you get on that runway, like, yo, there's so much physics there to make sure it reverse engine thrust. That sounds so sexual for some reason, but exactly, D. Edwards, reverse engine thrust. That's basically that's what they do. Well, let's hope we don't get any reverse engine thrust on Palantir on Thursday. Should we talk about Palantir? Do you want to do Pinterest real quick? Let's leave Pinterest after. We'll do Pinterest a little bit later. Let's do Palantir first, and then we'll go to Pinterest. Pinterest, the shares are up 14%. We'll discuss more about it later. It's not that exciting. Google just needs to buy them out, quite frankly. But let's talk about Palantir. So, what's going to happen with good old Palantir on Thursday? We'll talk about it in a proper daily Palantir episode, and we'll go more in depth on what I think is going to be happening. But I don't know, man. I do not think personally. Let me pull up the stock. I just don't think we are going to have a catalyst that is exciting enough for the street to not be worried about the revenue growth. Again, my best case scenario is the stock tanks like 11 or 12, but AIP customer count growth is like phenomenal. And then that means that it's a cheap stock because they have a crap ton of customers that are going to be monetized, even if they're not monetized right now. And their client portfolio list is growing pretty dramatically. That's great. Now, granted, there are a lot of people who have a lot of gains, and those gains might disappear if if the stock goes to 11 or 12. And that's you as an individual investor, you have to decide to make those decisions of, do you want to buy the dip? Are you long-term? Do you take profits now? Whatever it is. But stock was at 18 a couple weeks ago, and it really wasn't because of macro. It was because of geopolitics. Remember, last time Palantir was at $18, the S&P 500 was at $460. The S&P 500 then came down to $430, and Palantir was still $18 after it came all the way down back to $13.90 and ran up to 18. And in the middle of that was a macro decline in regards to the S&P, like the general market, but also a geopolitical uprising of these wars over, territorial dispute, religion, all the stuff that's going on, terrorism. that has heightened the tensions of the global economy for companies that could provide defense software or defense manufacturing. Palantir is one of those companies. We have no idea if Palantir actually secures any revenue contracting from Israel. None of this stuff. All we know is that, like, the market thought Palantir should go up for it. But the shares have come down after that, right? The shares went down from 18 down to 14.69. And so, I mean, it's like it kind of deserved to come down from 18 to 14 because it went up for no reason outside of a rumor, And so I kind of felt like that was going to happen. But the question becomes, on this earnings call, do they announce something? Do they make a statement on Israel? Do they say we're pivotal in Israel, which I doubt they're going to do because it's too classified? Do they bring up this NHS deal that we've got to talk about as well, which is just causing a lot of hoopla on the British media? Do they, really beat expectations on revenue? Do they somehow outsell AIP clients, on I have no idea what they're going to announce outside of they're probably going to bring in $557 million of revenue. They're going to be GAAP profitable and maybe raise guidance slightly for Q4. And if they do all of those things, even if they do, if we saw what happened with SoFi, I think that could happen with Palantir, where the street's like, well, you did okay. You really didn't do that amazing. So we don't want to own the stock. Again, SoFi, in my opinion, did amazing. And the street said, we still don't want to own the stock. Lunar says, I expect a small beat, but NHS deal is announced. I'm also starting to think NHS deal is announced November 2nd as well, in 3 days. They said mid-October. We're not mid-October anymore. If I had to bet, I would say they do announce that deal just because they need an earnings kind of bonanza, right? They need something that launches a really important announcement. But if they don't announce it, then I don't know what's going to be super special about earnings. And so I guess we will have to see. Palantir needs to stop giving away their stuff for free. No, Stefan, I disagree on this. Remember, Foundry is something a client has to pay for in order to get AIP. Because AIP is useless without connecting to a centralized ontology. So they're selling Foundry, getting people onto AIP. They just might not be charging for it right now. And they're not monetizing AIP because if AIP works, then they'll figure out what the real value of that software is and then turn on the spigot of monetization within a year. Or within 6 months of a pilot. So I do think that they have the right go-to-market. It's not like they don't have the right go-to-market. Their boot camps are doing very well. All that stuff is great. It's that revenue just might not be amazing. And that's really not even their fault. That's just the nature of the guidance they gave, and we knew that would happen. So we'll see where it goes from here. Steven says sleeping is very important for your health. I don't disagree. Sleeping is very important for your health. There's a lot of studies that you need to sleep every night. And when I was in high school, I thought I barely slept, and in college I barely slept. But as I've gotten older, I realized I can't function. Right now, the room is kind of moving right now. After 2 days of no sleeping, it's pretty intense. And the most annoying part, so I agree with you, sleeping is important, but sometimes you got to do what you got to do. The most annoying part yesterday was being at the airport in Las Vegas for another 5 hours and just sitting there and being like, all right, well, what am I supposed to do? Because I'm not playing the slot machine. I'm not going to do that. So I was just sitting there. And I couldn't sleep in the hotel in the airport. Because one, I was afraid I would miss the boarding, and two, because I was so tired, I don't know if I would really be able to get up. And then two, where would I sleep? On the floor? It would be tough to kind of do it. You don't have to sleep to ring the cowbell. That is true. Great to see you back in the studio, man. Technical trader Wong, thank you for being here as well. Appreciate you being here. And yeah, we're back in the studio. All right, so that was Tesla. That was Palantir. We'll see what ends up going from there and where the market is going to be able to take it. Let's see what else we've got on the agenda. I think we have Apple earnings this week. We've actually got a lot of other companies, even though they're not big tech, reporting. Big tech, we're kind of midway into this earnings season, and big tech hasn't been horrible. The market hasn't been horrible. But the banks definitely haven't been horrible. But some companies like Pfizer, right, just absolutely got destroyed. Tesla got destroyed, even though their earnings weren't that bad. SoFi kind of got destroyed, given their earnings weren't that bad either. And so we're seeing, companies performing, but the market really not giving exactly the premium that they need to be able to give because this macro is very, very uncertain. And we also have a rate hike decision that is coming up tomorrow, correct? Yes, November 1st. So, literally tomorrow, the Fed is going to be deciding if we raise another 25 basis points. Let's get some coverage on what people think is going to happen with the Fed, and where are going to go, what the Fed might end up trying to do. Let's take a look at this clip, and then we'll go from here. Don says, even after 2 days of sleep, you are still more energetic than I am. Dude, I liked what someone said yesterday in the chat, like Amit takes blow before the market opens. I was like, I don't, but if I put myself in that mindset, then maybe it'll seem like I do.
We're going to see a pause tomorrow, but give us a sense. Is it a hawkish pause? Is it a dovish pause? What about December?
Unfortunately, every pause at this stage is probably a hawkish one. You've heard from Chairman Powell. They want to keep their options open. They're not ruling out further tightening in monetary policy, and simply keeping that uncertainty alive is communicating a sense of restraint. QT is still ongoing. So this is still a period in which we have some building monetary restraint. At the same time, I think you're going to see next year is a year of progress on measured inflation. We really know what's going on in the housing market now. Even if it bounced back, you look at housing price measures in the CPI, and they're still nearly 7.5% over the last 12 months. This is going to be coming down. We're expecting labor markets, which have been out way in front of.
He's absolutely right on housing coming down. So I also think we're gonna get a pause tomorrow. It's pretty obvious we're gonna get a pause. But the question is, the markets are so spooked right now. Does a pause make us happy, or does a pause just like water under the bridge, and then we look forward to December's meeting?
To the economy, outgrowing it. It's going to be a period in which the policy is going to change towards one that's going to be a little more protective of the current expansion.
All right, so we're getting ahead of ourselves.
Shout out to Davis in the chat. Davis, for those that don't know, he made like a song about Palantir on Twitter. He's just an awesome, fun guy. Big PayPal investor, SoFi investor. He's jacked. He's ripped. You see him. His veins are just popping out of his arms like it's insane. Shout out to you, Davis. We got to come back to Vegas, and we got a good couple hours to just talk. So I was appreciative of seeing you. Shout out to you. Thank you for being here.
So you're already to next year. Let's focus on December just for a minute. So you said this is going to be a hawkish pause, because all these pauses are hawkish right now. Looking at the CME tool, about a 75% chance of a Fed pause in December as well. How do you see that shaping up? Because we got a lot of market moving reports. We got PCE, we always call it the Fed's inflation gauge, on November the 30th. And we also have 2 more CPI reports before the next meeting.
Look, I think headline inflation by the end of the year will be 3.7. And I don't think that that's going to convince the Fed that their policy will not in time, with patience, lower the inflation rate going forward, that they're likely to hit their target, I think, ahead of time by the end of next year, not the year after. So that, again, if the Fed is patient here, they can avoid a sharp easing cycle, which is the risk they would face if they were to actually shock the system further at this point. So it's going to take a little bit of patience. I think most of the data that we just saw at the beginning of 4Q, or the September data, were much stronger than the trend. You just take a look at the range that we've had on employment, for example. In the last 18 months, it's been 105,000 to 904,000. And what you saw with the month of September was well above the slowing pace that we see going ahead.
All right, so you're really, wait, Stephen, you're really focused on data, and I heard the Fed's always said it's data dependent, but what about some of the data that we're getting from Mike Wilson, from Lori Calvasina, a lot of these top Wall Street minds that are saying the impact of these rate increases hasn't quite been felt yet? Does the Fed pay attention to that as well?
So I think the Fed is not very worried about financial conditions. They've been tightening. I think investors, though, need to be a little bit overjoyed that there is a little more worry in the market. You know, we have not only come down 10% from the inter-year high, we're down very considerably across the board since 2021. If you take a look at Magnificent Seven stocks, they're the only ones that have kept the global equity market from having a dip, a drop for the full year.
So these are some of the bears that have been bad about the S&P 500. This Morgan Stanley Mike Wilson guy, so he said the chances of a Q4 rally have fallen considerably. Remember, Mike Wilson is the guy that said the market's going to like really crash this year, and then the market went up, what is it, like 18%? And so he said in September, the market's probably going to come down back to 420 on the S&P 500. And he said there's a short window. It either happens or September, October, and if it doesn't, then I was wrong this entire year. It ended up happening, right? So Mike Wilson was right. The question becomes, Mike Wilson, are you waiting until that 3,900, 3,800 range to load up for your clients that were he admitted like mad at him this year for not investing? Or do you just, is this the dip, right, that you were looking for? And so the thing about the bears is that when the market goes down, they think it's going to go down forever. And if we actually do end up having a rally, a lot of people will be chasing it again, just like they were chasing it this entire year. The problem is, from an economic standpoint, it feels structurally that a rally is almost impossible because this recession is inevitable. And so I think that's the confusion going on in the markets right now.
So the fact is financial conditions have tightened a lot. Expectations are not in line with the consensus of 12% EPS growth, if you think about end investors. And I think the opportunity of just keeping this expansion alive for a stronger year further out should be good enough for financial markets.
The bricks are back, baby. Troy says, I miss these bricks so much. The bricks are back. So in the context of a rate hike or a pause, I think we all agree we're getting a pause. So like this idea of a hike basically was destroyed over the past couple of weeks, just seeing what's going on with the markets. Also, when Israel decided to do a ground invasion of Hamas in Gaza because of the terrorist attack, even though that ground invasion hasn't necessarily happened the way Israel, they've kept delaying it. But once they declared war, I think that also spooked the markets and the Fed into basically being like, there's no way we can continue to raise rates because there's too much geopolitical instability. Was it a soft landing on the plane? On the second one, it was more of a hard landing. And on the first one, it was fine. On the second one, it was a little bit more hard. But maybe Jerome Powell needs to take some inspiration from that first flight. So we'll see what ends up happening. We're going to get a pause, but if that pause actually leads to something substantial in the equity markets, I don't know. I don't think the market's going to care too much, but let's take one look here. We got the market open in about 17 minutes. Let's take a look for why the FOMC meeting might be a bullish thing for the broader markets, even if we get a pause.
For now, let's talk more about today's rally with our market panel. Joining us now is Anastasia.
I don't quite trust it, John, because I do think some of the fundamentals are starting to change. But let's talk about different time horizons. Let's just talk about this week and maybe into year end, and then 2024 is a separate story. I do think, as Mike pointed out, coming into this week, we did hit some oversold levels. We've got a lot of the community, systematic community, hedge fund community that did de-risk coming into this week. So the positioning slate is a lot cleaner. And of course, as you also mentioned, we are now sort of in the back half of the earnings season, which means more corporate buybacks are likely to come back. So I think mechanically, we can justify a case for some sort of a bounce back here. The other thing that I'm looking for this week is the Fed. And I actually expect that might be a bullish development, because Fed Chair Powell sort of alluded to the case that, the fact that Treasury yields rose across the curve means they might be done tightening. I think he might reiterate that. How much the Treasury yield curve has steepened out and how much the back end of the curve has risen, that is a lot of tightening that the economy has to digest. So I think that doesn't count for only one, but possibly 3 rate hikes. So I think if the Fed delivers that sort of message, that could be a near-term bullish catalyst for the markets.
Yeah, see, and we don't know what Jerome's going to say. I think that's the hardest thing that the markets are trying to figure out. Thank you, everyone, for being here. We got about 15 minutes into the market open. Morning and mid-morning gold. Daphne, thank you for being here. We don't know what Jerome's going to say. We know it's probably going to be a pause, but we don't know if it's going to be a dovish pause or a hawkish pause, and how they're going to argue. Jerome Powell needs to address the unemployment issue. He needs to address the fact that the labor market is the best it's ever been, in the past decade. He needs to address the headline CPI not really going down as much as core, and what are his thoughts on core and CPI. He needs to talk about the state of the consumer. The consumer seems to be doing very well. Pinterest was up 14%. The consumer is, buying stuff off of Pinterest. That's why advertisers keep paying for Pinterest. Right now, Pinterest stock at $28.80. They beat on revenue, beat on EPS. Like, the consumer's strong. When is that consumer not going to be strong? When is the economy going to get to the point where something has to break enough for inevitably the Fed to be like, all right, the economy's starting to break. Maybe we need to lower some of these rates. Like, when is that happening, bro? And if we don't know when it's going to happen, and we have this 10-year that's at 4.8, 4.9, got to 5%, it's so uncertain to be able to invest in the equity markets. Now, long-term, obviously, all of us being more long-term investors, the equity markets are probably going to deliver a better return, especially if we pick the better companies, the best companies. But I think in the short term, I'm trying to figure out if this end of year rally is going to happen. I feel like we're all gasping at like, what is the catalyst for the end of the year to kind of take off? And 3 weeks ago, it made sense. We kind of saw Q3 earnings, expectations were being beat. All this stuff was in the right place. Inflation was coming down, not going to get another rate hike. But now it just feels like markets are scared. Markets are very, very scared, and we have no idea where the markets want to fully go. Heinze, thank you all for being here. Heinze, Imnop, Garcia, all these people in the chat where I saw them in person, which is so cool that I saw them in person. And, they asked for my autograph. I told them, guys, we're in public right now. We can do this a little bit later. So you guys, just chill a little bit. Like, I get it, but like, no, I'm just kidding. They all told me in person, hey, Amit, you know how we say you're not funny on the live stream? Yeah, you're not funny in person either. Now, granted, pretty much every viewer I met laughed hysterically when I met them in person, because when you meet me in person, I'm the same guy on the live stream. Okay. I'm a funny guy. I'm a funny dude. When you see me, I'm gonna make a joke in like 2 seconds and you're gonna start laughing and you're gonna be like, wow, how'd this, like, it's just the nature of who I am. So they can disavow my humor all they want, but they definitely got to see some of that humor this week. All right. Apple has some issues going on. Apple stock down at $169. They announced a bunch. Let's transition to Apple. They announced a bunch of shit yesterday. And quite frankly, I don't give a shit about what they announced, but they announced some shit. And I don't think anyone gives a shit about what they announced. It's a new MacBook Pro. I mean, okay. It's a new iMac. Okay. Like, I don't know. Like, I've never liked MacBook products, quite frankly. So it's whatever. But I don't know if these are going to save their quarter. These are going to save their earnings. Apple is not growing as much as they need to. But yeah, I guess let's get a little coverage and see if there's anything exciting about Apple, especially with what's going on in China.
Next up, another big story that'll play out tomorrow. We're about a half an hour away from what Apple's calling a scary fast product event. How big of a splash, if at all, could it make tonight? Steve Kovac has the details on what we might expect. And like everything, Steve, it's crowded in Apple mystery.
That's right. Yeah. Well, Apple's getting spooky tonight, 8 p.m. Eastern, hosting a virtual event. They're calling it Scary Fast. Get it? Because it's almost Halloween. We're expecting it to unveil a new Mac lineup for the holidays. And knowing those Apple execs, more than a few Halloween jokes and puns. But the computers will be the same. That's the Mac iMac.
It's a great computer. Does it matter at all to Apple's stock price?
Nope. Probably doesn't.
Brian, it does, in the sense that when you're a $430 billion company, you need every product to kind of build. They need signals to, in a baseball analogy, to create runs. And the Mac has a potential to be that. It's 10% of overall sales. It has been up and down the last couple of years. It was up 23% in 2021. Before that, in the 5 years before that, it was basically up 2% on average. So it just rocketed. And this year, fiscal 23, it's going to be down almost 30%. And so does it matter to investors? If you have 10% of your business that's down 30%, investors want to see that right size. I think what they're going to do tonight is going to be a huge step in that direction. For the December quarter, I expect it to be up, call it 5 to 7%. So they care because this has been a dive downward in terms of revenue growth over the last few quarters.
Yeah. Gene, switching gears, talking about the phone, which certainly does matter to Apple investors. Do they have a China problem, given that apparently China, with this new Huawei phone, a lot of people in China, no surprise, are choosing the hometown favorite?
I think, yes, the simple answer is Apple does have a China problem. I think when it comes to the phone, my sense is it's going to be soft in China for the September quarter. I think that'll be offset by strength in the U.S., but China is seeing some more competition. Tim Cook, of course, had that surprise visit on October 17th to China. He did it to probably prop up the brand, which it would be a result of kind of softness. And then, of course, the China equation goes beyond just demand. There's, of course, the government's making it more difficult, Chinese government, to build products in China for Apple.
All right, next up, another.
Yeah, look, they're gonna suffer this quarter. I think Apple. I don't think their revenue growth is gonna be as good as the street wants it. I think services is going to be monetized, but it's going to take time for services to monetize at a substantial rate. They probably might grow 20% this year in Q3. They report what on Thursday? Yeah, I think they report on Thursday. Someone can correct me in the chat if you guys know, but I don't know, man. I'm just not excited for Apple. Not excited for Apple. Love the iPhone 15, but I just until maybe Vision Pro is really the story that has to play out. And the craziest part is we have to be excited for Apple because Apple is kind of the market. Like the S&P 500, 7.3% of that is Apple. So if Apple's not doing good, like that's not going to help. It's not going to help any of us. But we'll see. We'll get numbers soon, and we'll figure out. A couple of headlines I want to run through real quick. Shield AI has raised $200 million at a $2.7 billion valuation to scale military autonomous flying tech. I don't know about Shield AI. You probably don't know about Shield AI. The reason I wanted to read that headline is because that is continuing to prove a little bit more around this bull case of Palantir. More defense contractors, defense military tech companies, all these VCs are trying to find the next Palantir, the next Anduril. When you see a company like Shield AI at a $2.7 billion valuation, remember Anduril, I think in the private market's around $7 billion. So almost 1/5, 1/3, around 1/4-ish of what Anduril's valuation is. To scale military autonomous flying tech. The reason they're getting these investments is because investors think autonomous tech for drones and things of that nature is going to be in more demand over the next decade. And so that's a headline that I think is important as well to think about. Austin, what's up? Thank you for being here. Myra says Apple can't innovate anymore. Yeah, and it's tough. I don't blame them. Like I think this phone is just, you can't make it that much better and they have to figure out other things to do. But investors also have to recognize maybe that growth really is there. And quite frankly, I asked Siri yesterday to turn off autocorrect and Siri didn't turn off autocorrect. Apple deserves to be like a $5 billion company for not being able to get Siri to turn off autocorrect. Okay, like the fact that Siri can't do basic things is just insane. And we're in an AI age where like Apple could be able to build LLMs via their iPhone very easily, have voice assistant, and they haven't done anything. And that's, I think, the most disappointing thing to me in the context of Apple. Some other headlines. So the M3 iMac is up for pre-order starting at $1,300. So I guess the M3, M3 Pro, and M3 Max 3 chips are going to have a big graphic boost, and some of those prices are decent as per what people are saying. So that's not going to be horrible. Twitter, another little big headline, has decided that they are now going to offer employee stock grants valuing the company at $19 billion. Let's get a quick update on this and see what is going on Twitter. And then I'll talk about that Biden executive AI order. That's another headline that is on the list.
Welcome back to Squawk Box. We should talk about X for a moment because X, formerly known as Twitter, now telling employees that it's worth something. We kind of knew this, but maybe the number is going to surprise people. Officially saying the company is worth $19 billion. This is according to a whole bunch of media reports out there. X is awarding employees stock grants at a price of $45 per share. Translates to a valuation of about 55% below Elon Musk's $44 billion takeover price.
Look, $19 billion is actually really good for the employees. $44 billion is what Elon bought for, so Elon's underwater. But $19 billion, I think, is very reasonable for Twitter. They're going to do $4 billion in revenue. It's not the craziest multiple. They're probably not going to be profitable, but the potential of the platform, it's getting reportedly 1.5 million users a day. If they keep that growth continuing, Twitter's going to have 1 billion users. Now, it's going to take a while for that to happen, but if that does happen, 1 billion user platform with a very engaged, sticky user base at a $19 billion valuation, I could see that becoming a $100 billion company over the next decade. That is absolutely possible. And those employees then have a 5X that they're looking at, which is great. I mean, to have a 5X and probably even elevated because of all the option grants. So I think that's a really fair price for some of these employees. For Elon, it's not the best, but that's good, at least for employees to be more motivated. And again, the reason this matters is because Elon should not be selling Tesla shares to fund the Twitter debt financing. And so Twitter needs to be working and thriving in order for Tesla to also get the benefit of everything that's happening as a result of Twitter, or now X, which I guess we have to call X as well. But didn't Elon say they probably lost 90% in value since he bought it? Yeah. Remember, Elon, this is the funniest thing in the world, right? The fact that he bought X, because he was trolling when he was saying and he was going to buy it. He put in an offer, didn't want to buy it after, then had to buy. Like, He just had to go through something that cost $44 billion to do something that was unnecessary. But I think my kind of tinfoil hat theory is that he saw the media as an existential threat to the inevitable worldwide takeover of Tesla, given the corporate interest to not have Tesla succeed, which I think has been very obvious, right? Just how the media has been against Tesla. And I think he needed the biggest megaphone he could get. So you could argue 44 billion was relatively cheap in the grand scheme if Tesla, wins and uses Twitter as a propaganda machine. And I don't say that in a negative way, but like, in a more fair, a nuanced platform that doesn't give priority to certain things or censor certain things, to allow Tesla's message to get out there into the world. Maybe it's a little bit of a stretch, but I think that's also a reason why he bought Twitter. He bought Twitter to make sure that, just like Bezos bought Washington Post, right? You need a media arm underneath you. And Twitter is a tech company with a lot of media underneath it versus just like one media company. But maybe it protects Tesla. I could be wrong on that, but I think that is my theory for why he ultimately decided to buy Twitter. So now you can buy more stock in Twitter at $20 billion if you are at the company. So that was another headline we saw. We got the market open in about 3 minutes. Let's get into equities and see what's going on there, and then we'll keep going into the markets. If you did not catch yesterday's market open, in the last 20 minutes, I was live with Chris and Carlos, my fellow finance junkies, and we got to talk together about Vegas and the trip and how fun it was and what we got to do. It was great meeting a lot of people there and reflecting on it. So it was fun. I think we'll do Finance Junkies tonight. We might not be able to do it. And if we can't do it, then we'll be back tomorrow. But overall, a really fun trip. And we got to all be together and do a little bit of a live stream. Uber at 42.73, SoFi at 7.04, up 1.44%, Pinterest up 16%. So Pinterest, a big earner from their earnings yesterday. Let me pull up their numbers real quick as well. I just want to see some of the top line numbers while we're going through these. And we'll see if this can keep going. Okay, so Pinterest did 11% increase in third quarter sales, revenue $763 million, earnings 28 cents per share. Yeah, so they beat revenue by about 20 million. They beat earnings per share by about 8 cents, and that's why the market is giving them the benefit for Elon being here. I'm going to do a live stream of you sleeping. That would be hilarious. The live stream of you sleeping. That would be so funny. Okay, so we got PayPal at 51.05. Minutes till market opens. Disney been in a little bit of a tough spot, $80.77. Chris and I were even talking about Disney, and he was like, yeah, Disney's struggling a little bit, and we'll see what ends up happening with Disney. Again, my thesis on Disney has always been Disney Plus is just not interesting, and so it really never caught my attention, at least like the larger bull case. But they do have more activist investors that are now stepping in and seeing if they can save this company or at least save the stock. The company's fine. The question is, can we get the street to buy more of the stock? Google at 126, up a little bit in the pre-markets. Rivian down a little bit in the pre-markets. Microsoft at 337, still containing some of that earnings pop that it had last week. We got about 20 seconds till the market opens. Let's see where Palantir goes. It's right in the pre-market. Let's see where Tesla goes, still underneath $200. We are going to see on this spooky Halloween where the market decides to go. His costume is not wearing anything goofy. Dude, I wish I had a costume. I'm so sad I don't have a costume, but now you get a costume of someone who has barely slept, but is going to do this market open because the show doesn't stop. October 31st, 2023, 9:30 a.m. Oh, how I've missed my cowbell, but the stock market is open again, and it's time to ring the bell. Wake your ass up. We are here back, as always, in the market open. Let's get into it. Palantir. We're starting off with Palantir. What do we got on Palantir? 1462. So we're under 15 officially on Palantir. We ended under 15 yesterday. We'll see if it rebounds back to 15. I am going to be assigned some shares at $15 strike price on November 3rd. And if Palantir is not above 15 on November 3rd. So we'll see what happens with Palantir right now. $14.62 on Palantir. Pinterest up 15% of the day, $29.16. I think the bull case for Pinterest is that Google buys them out. They are the largest search engine for images. That's how I think of Pinterest, a image search engine for, particularly mid-aged moms that really enjoy using that type of platform. They get 1 billion visitors a month. Google should buy it. I don't know if the government will let them buy it, but I think it wouldn't be that controversial, and I think there would be a healthy premium. I think the stock got to like $40, $50 at one point in 2021. But in general, outside of that, Pinterest is not like the most exciting to me. SoFi 715 up 2%. Nice little pop on SoFi again. Earnings were amazing yesterday. The market just wasn't able to give it the premium. Truist 28.23. Enphase 79.50. This stock is still underneath $80, up 1.07%. Stock was at 1.1, 80, 140, 130, 100, and now at 79. We got a lot of work for Enphase to get back to even $100 at this point. Tesla 197. Tesla under 200. I mean, it happened. We got it under 200. The question becomes, does the dip get bought? Do people say this is stupid, this price is ridiculous, or does it feel like it was in January 2023 where the stock's not at $100, but the sentiment is just wrecked, and maybe the stock has some further downside to go. McDonald's at 262. McDonald's had really good earnings yesterday as well, 6.69 billion in revenue. S&P 500 415. Square 39.56. Square still below that $40 range. Meet Kevin's ETF 2030 take a big hit from PayPal, Apple, Tesla, and Enphase. Those four stocks are big in his portfolio. Enphase and Tesla being the two biggest, and those got destroyed. So right now that ETF is suffering a little bit, and it's going to take a while to see those two come back. Robinhood at 911. It'll also be interesting to see if Meet Kevin sells out of Enphase and just like takes the loss, because remember the PP ETF, it stands for pricing power. Enphase obviously has no pricing power. He messed up. It's not a price. There's no pricing power to Enphase. Maybe you just take the L, right? Maybe you're down 70%. Just get rid of it and put it into something that's can be able to return that capital sooner. Or you double down on Enphase. It'll be interesting to see what Meet Kevin decides to do, but that is one of the situations he's in right now. PayPal earnings is going to be November 7th, I believe. So we got about a week until PayPal earnings, $51.19 on PayPal. This is a company that has been just absolutely destroyed. It's a beloved retail company. Everyone, wants this company to do well. People think it's Meta at 88. I heard a bunch of people this weekend tell me it was a value trap at Vegas. I heard a bunch of people tell me that PayPal is going to go to the moon. I'm more on the side of I think it can get to $80 by next year quite reasonably if they just continue to execute. But the macro does have to change in order for that to happen. Verizon continuing its run, Intel, $35.77, but also Verizon up at $34 and 88 cents. Google at $125.93. Amazon at $133. Lucid, beloved Lucid, stuck below $5, $4.85. What else do we have? Apple at $168.80. Apple continuing to go below $170. Meta at $300. Also, Meta earnings, we didn't give them enough credit. Constantly just amazing numbers. $34 billion in revenue. I get why the street is upset about the metaverse spend being too much for the company, which is reasonable, right? But like Zucks has to do some innovation, still putting up the numbers they put up. The street is just not giving it a premium in this market, and that's why we're seeing Meta also take a hit as well. PayPal's tomorrow. Holy crap. PayPal's on November 1st? Really? Oh my goodness. November. So tomorrow we get the rate. Is it in the morning? I'm assuming it's in the morning, right? Oh man, it's in the morning. Wow. Dude, that's going to be crazy. Oh, post-market. Okay. So tomorrow post-market. Oh boy, this is going to be a fun one, bro. Tomorrow we're going to lose some more money. Is everyone ready to lose some more money tomorrow? Because we got to get ready for losing money. It'll be fun. It looks like why is Coinbase at 73? Wasn't Coinbase at like 85 the other day? Like what happened to Coinbase? Why is it going down? But in all seriousness, I hope PayPal is going to be good tomorrow. Let me actually pull up an article now that we're talking on PayPal a little bit on some of the expectations I think people have going into the company's earnings. So let's see what we want to see on PayPal. Okay, so PayPal we want $7.38 billion on PayPal. That's 8% year-over-year growth. We want an EPS of $1.23. That's a 14% year-over-year growth. And we want more EPS revisions to the upside and revenue revisions up the upside on 2026 or 2024 going into the Q3 report. Most analysts think that will come within those expectations. And then that transaction margin revenue, that's also something that analysts want to see continuing to go higher. Remember Braintree, which is PayPal's unbranded checkout, that's growing 30% year over year. And because that's growing 30% year over year, investors do think there is some potential in PayPal to continue to do well. The problem is that going to be able to impact their transaction margins enough where people think that even though they have 431 million users, they're able to make money off those millions of users. People do use PayPal. It is the number 40th biggest downloaded app on the entire App Store. Venmo is ahead of it. PayPal owns Venmo. So it's not like people don't use PayPal. It's not like people don't use that product. It's not like businesses have abandoned it. It's just that the narrative has been there is so much competition, like a Klarna, like an Apple Pay. You know, there's a variety of different vendors you can pay with, that maybe PayPal is not the most exciting. Bro, do you guys hear my voice? I'm starting to like this is my Halloween act. I'm like sounding like the Joker. I can't even cough it out. Like this is what happens when you don't sleep for 2 days. I can't even cough out what's going on in my throat right now. I kind of like it. I kind of sound like Gavin Newsom. You know, I kind of sound like I'm trying to think of what Gavin says. Like I really do. He has that like Batman joke. I've always thought Gavin Newsom literally is the Joker. Like that guy, if he looks like the Joker, right? And then when he talks like the Joker as well. Or more, he talks more like Batman, but he looks like the Joker. That's what's going on in my voice. Dutch Bros, people tried. Dutch Bros, you know, we had a group of people go to Dutch Bros. Let's actually check on their stock. They weren't impressed. We had a group go to Vegas to try out Dutch Bros. A lot of people were like, it was mid. It was not as good as, you know, we thought it was going to be. So I didn't get to try it because I was sleeping the day that people went to go and get it. But some people thought it was just, you know, not that good. SoFi up 3%. The market giving a little bit of love to SoFi. For those wondering why the market didn't give it love, I don't think it was anything fundamental in the numbers. It was this idea, I guess, that a triple beat or that, you know, doing really well in this market just can't be rewarded because there's too many macro factors pushing equities to not have the level of investor sentiment or liquidity from investors to be able to prop up higher. And so I think that creates some type of pent up demand that eventually when that liquidity funds into the equity markets, remember, there's still $5.5 trillion in money market funds as of today. And eventually that has to come into equities, or at least that's the hope, given American innovation. We think that that money will stop being on the sidelines. It's going to come into companies that are growing, and PayPal's really growing. Who would have thought 700,000 people would have signed up for this product? I mean, it's just insane. It blew away all of our expectations. So very happy with SoFi's performance, and I think the market will eventually reward it. But as of now, we're not getting that message from the stock market. And really, I think it's more Mac related than anything else. Okay, we got some Biden AI executive action. I want to pull that up. I didn't get to talk about this at all, but I saw this on Twitter a lot yesterday. So let's get a little video update on this, and we'll talk more. Obviously, this impacts all companies that are in the AI space. Definitely impacts Palantir. Let's hear what Biden's trying to do with AI.
Biden signing his first executive order aimed at regulating artificial intelligence. It's going to set some new security and privacy protections, such as creating watermarking standards for AI-generated content. Joining us right now, though, to talk about all of this is Chris Krebs. He's the former cyber.
Dude, did you hear that? That's crazy. He said he said part of the regulation is watermarking AI-generated content. That means if you make a photo of something via AI, it has to say this was made by AI in a watermark. There is no way that's going to become a law. That's like insane, in my opinion, because that takes away from the whole value from the photo. But if that becomes a law, that would be very interesting.
Cybersecurity and Infrastructure Security Agency Director, now Krebs Stamos Group partner. Good morning to you. You saw what the administration laid out yesterday. There's been a lot of, let's say, public discussion for the last several months about the need to regulate this. But at least in the private discussions I had yesterday with folks in this space, there was a sort of an undercurrent of, oh my goodness, is all this going to go too far now? Are we going to be getting, subpoenas and requests for all sorts of information that we didn't anticipate or expect, and that this is going to slow things down? Did you have the same conversations I did yesterday?
I had some, and there was a little bit of, hey, this is really happening, particularly when you think about the fact that ChatGPT's first version wasn't publicly released until about 11 months ago. So this has all happened quite fast. The executive order itself, in terms of the requirements and some of the demands that may be coming to companies, I still think they're a bit far off. When you look at some of the reporting requirements under the Defense Production Act, that's really the heaviest or weightiest part of the EO. It applies to models that practically don't exist yet. And so it really is about future frontier models, and everything that's in existence right now has, much less rigorous requirements.
Well, that's the Defense Production Act piece seem to be the most extensive, or at least would give the government access to things that it might not be able to access in almost any other context. So what's the important takeaway there?
I was a little taken aback by the DPA requirement. The DPA, the Defense Production Act, it applies to national security, to what the Pentagon can access when and where, but also Homeland Security and FEMA. You tend to see it in hurricanes and ramp up for military action. And I think that's a bit of the risk right now, is that you could see some challenges under the DPA when, frankly, we need it most, when what you're seeing in Ukraine, in the Middle East, and potentially in the buildup for China invasion of Taiwan. It's a risky time. But nonetheless, I do think that it was a fairly surgical use of the DPA rather than some of the other tools that the administration.
What do you think the greatest risk in terms of AI is right this minute? I mean, the generative AI and how it's being used. Is it in the context of what we're seeing in the Israel-Hamas war and how social media, things that were being pushed? Is it something else? What's your concern?
Well, the EO actually calls it out. So to your point about some of the labeling of AI-generated content and the lack of discernment and ability to tell what's real and what's not, that's obviously a concern of the administration. I'm not sure that their requirement's going to work, because bad guys don't play by the rules anyway. The second is, if you look at the model weights that they call out, that for the DPA, the Defense Production Act requirements, they specifically talk about biological sequencing data. And so they are worried about biological weapons being able to be generated using some of these future tools.
This is going to be one of the most challenging things that the administration, whether it's Biden this year or Trump next year or Biden again next year, is going to be able to figure out. Regulating AI, I mean, the level of components into these models it's not easy. I mean, so one thing, right? The biologicals creation of different DNA and using artificial intelligence to enhance that stuff, and maybe cyber kinetic weapons, like the use of AI in weaponry, I would think definitely requires some regulation, right? But how do you regulate that stuff? And that's way more important than AI and content moderation, like a watermark on a content piece AI generated piece of content. But content is propaganda, so you could argue that matters even more than actual military weapons, because if everyone believes something, you have a propaganda machine that resembles things that have happened historically in the past, when a lot of people believe into something, and believing into that something then leads them to do things because they're influenced by it. I mean, like if you say this person is the worst person in the world, and then billions of people agree this person or this idea is the worst idea in the world, you mobilize action, and you have a planet that is filled with a lot of crazy people doing a lot of crazy shit because they ran into information that's not even real and it's generated by AI. So it's tough. Totally agree, Amit, because even if you regulate it, your enemies will not. That's the other thing. China and Russia are not really regulating AI. This is going to be a very difficult thing. And quite frankly, Joe Biden, in my humble opinion, is not the president to figure this out. I don't even think any president is the one to figure this out. I think you need really advanced industry tech leaders. And it's not the CEOs of the AI companies. It's like the heads of data science at all those, you need actual scientists that are working with this stuff every day to be able to come up with some proposed regulations. And it has to be done in public. Like, we need to be able, as consumers that are interacting with this technology every day via ChatGPT, LLMs, etc., to be able to look at these regulations in plain English, not some 1,000-page document, but just like a couple sentences on what the regulation is, and then be like, will we like that or not like that? It should be a really a transparent process in order to decide this stuff. And if they don't, it's not gonna be too easy to do this. Where is Nvidia stock? I haven't looked at Nvidia today. Nvidia, I'm gonna guess it's at 430. That's my guess. Nvidia, what? Nvidia's below 400. Oh my. SoFi's up 5%. I got a notification. Nvidia's below 400. Did Nvidia go below 400 yesterday? No, that's today. That's today. Nvidia's down 16 points today. Nvidia's down below 400. Okay, I got to tweet that picture out. I got to tweet the Nvidia picture out. So we'll do that in real time. There you go, folks. There you go. Look at that. Nvidia down 395. Wow. When's the last time we saw this? When did this happen? This is Nvidia, everyone, everyone says this one's overvalued. Nvidia, this is a tough one. I can't defend the valuation either. I mean, the growth is insane, and last quarter the growth was insane either. It was like triple-digit growth, but valuation is a little tough, bro. Like Meta's doing $125 billion in revenue a year. The market cap's at 800 billion. Nvidia's at $1 trillion, and they're doing like 40-50 billion revenue a year. And now I know that's just one random metric, but like still it's tough. Nvidia below 400. So yeah, that one's down as well. Market's definitely not rewarding it right here. Taylor Swift 2024, bro. If Taylor Swift just became the president, maybe she would solve all of our problems. Palantir up at 1473, up 0.2 for 7%. SoFi 736, up 6%. SoFi running a little bit. Let's see if it's sustainable. It's played with me a little bit too much, SoFi. So we'll see if the market continues to sustain the rally. But SoFi up 6%, not bad. Tesla 198, it's up a little bit. Amazon's down. S&P is down. Meta is down. Meta below 300. Spotify 162, that is down as well. Verizon's up. Coca-Cola's up. GM is up. 3M is up. So there you got a bunch of value companies. Johnson & Johnson is up. Bank of America is up. Maybe we're transitioning a little bit from this growth to value play, which is why we're seeing a little bit more of the value stocks go up. And we're seeing a lot more value investors come online and basically make the case for why growth is not worth it right now, because the growth can't justify the valuations. And the good thing about expectations getting lower for Q4 is that eventually if Q4 earnings are good, we'll be okay. But those expectations have to be met regardless if we want stocks to have any level of momentum going into the latter half of the year. Let's get a bull case for why there is some potential for an end of year rally.
Need to throw the idea. I mean, he sounds, oh, yes, it's possible we could get a Santa Claus rally, but that's way off of the, market's sort of primed for a run into the end of the year. Now says it's unlikely to recoup what's been lost from the peak
July
until now.
Recouping what we lost from July might be somewhat difficult.
So you were looking for a year-end rally too.
Yeah, I do think we have the potential to have a year-end rally, middle of November, Thanksgiving-ish into December. Let's remember, NVIDIA will report as in the few days preceding Thanksgiving. That potentially could be a positive catalyst. You have companies that probably will be buying back their stock as we approach the end of the year. And you do have this deeply oversold condition that now correlates to bearish sentiment that's reflected in positioning as well. So I think you get it, but Scott, I don't think you're going to get. I don't think it's kind of like the Jet Giant game yesterday. The Jets eked out a win, but it was kind of an ugly game, and the Jets barely won. I think that's the market.
So we're going to get then more punts to play off that. We'll get more punts than anything else. We're not going to be able to get much offense going. We'll just go a bunch of 3 and outs. We may go sideways. Maybe we'll get a little bit of a bump. Maybe we get a little pullback. Is that the kind of market we're in for? By the way, Mike Wilson, big shock, says the chances of a fourth quarter rally have fallen considerably, though, while Piper Sandler says don't stop believing. 48.25. They stick with that.
Yeah, I don't know how we get to 48.25. Look,
well, you get it by going up 17%. That's
right,
how.
which I don't see. I think it's ludicrous. Look, I don't think it's out of the question that we hit Jim's target at the end of the year, but the question is from what level and what has to happen. So we'll be done with the Fed this week. Base case for everybody is that they don't hike. I don't see him really dialing back his somewhat hawkish tone. There's hope that they do, and the market may interpret it as they did the last Fed, his testimony just a few weeks ago that, he's pretty dovish, and they sat back and said, no, he's not. He's hawkish. And that took the market down.
Yeah, but you all don't forget also, we've been saying on this program, and Leisman said it as well numerous times, the movement in the bond market has given the Fed the ability to be patient.
That's my point. So you can't just look at the Fed. You have to look at what's going on. China is a big part, as I just mentioned, of what's going on. Is there an appetite for U.S. Treasuries with our big deficit? And to the countries that have been buying our bonds, they have work to do at home. to buy their own economy, to put liquidity into their own economy. So I don't think you look at one data point like productivity, which is an historical number. I think you have to look at trends. And the trends are that the consumer's weakening, delinquencies are moving up, the consumers have depleted their savings, and that just doesn't bode well. And the extended lag between what interest rates are doing, should be doing, and what they've done. So that, to me, makes your bear case. However, seasonally, and it's not so easy because if you only trade on seasonality and it was so predictable, everybody make money, right? But I think seasonality, you could rally off lows, but I don't think lows are yes.
How, Jimmy, can you guys?
Dude, I feel like at this point, no one knows. Like, he gave a pretty good bear case. It's a simple bear case that everyone gives, but there's arguments for the bull case. I just feel like we're all just like trying to figure it out, but like we don't know. And I know it's fun trying to figure it out, right? It's the process of trying to figure it out, but we don't know. So now, if I had a gun to my head and I had to say, is there going to be a end of year rally? I would say end of year rally maybe maxes out at the S&P at 430, or we just go sideways. I think there's more chances we go. There's better probability we stay 415 to 430 on the S&P versus go below 415 or go below 400. I don't think that's happening. I think stocks would get stupidly cheap at that time. They don't deserve to be stupidly cheap, even if they deserve to be a little cheap. Big tech still probably not cheap. I mean, I know Google fell pretty dramatically, but it's probably not cheap per se, or like not crazy cheap, even if it is cheap. But nonetheless, I think that this year has been a really good year for the markets. In August, it was a really great year, and it's cooling off. And I don't know if we get back to the levels of really great, but I do think we are setting up for a decent 2024, although there's a bunch of reasons for why there can be a bearish or very bearish 2024 as well. ELF is down 10%. They're reporting tomorrow. So either some of the numbers got leaked to people or the market's really scared, but down 11%, that's tough. If they're reporting tomorrow, someone knows something. This always happens. At this point, the tinfoil hat is like glued to me when I see this stuff happen in the market. There's no reason for the stock to be down 11% before their numbers, like 1%, 2%, whatever. 11%, someone knows there's some numbers that's happening. So we will see what happens with ELF tomorrow as well. That'll be an indication, at least in some proxy, for where the consumer is and if they're able to continue to keep buying makeup at least. Maybe 2024 ends up being really good. Maybe this is the dip that is happening in 2024, just like we got in 2022, and 2023 ended up being great. Maybe that ends up happening in 2024 is great, and 2023's end of year gives us a decent dip as well. Okay, I think that's it for me, guys. Let me get into the word of the day, because at this point, the screen is spinning after not sleeping for 2 days. So let's do the word of the day. Nothing else crazy to cover in the markets. Biggest news were some of the earnings updates we saw today. Tesla right now 197, SoFi 734, up 5% on the day. Palantir 1466, down 0.24%. We did a little bit of Palantir earnings preview today. We talked about GM earnings. We talked about Tesla earnings, we talked about Tesla price action, the Panasonic thing that happened. We talked about Apple regulating AI. Any reason we're going to get a hawkish pause? We'll get an argument on that tomorrow. We have PayPal earnings tomorrow. And then after that, this week, we have Apple that is going to determine a lot of the market as well. Word of the day is phantasmagoria.
Phantasmagoria.
Phantasmagoria. Okay, that's a fun one. On Halloween, this is a fun one. A shifting series of phantasms or I don't know how to say that. Illusions or deceptive appearances as in a dream or as created by the imagination. The magician's show was filled with a phantasmagoria of tricks and illusions. Okay, so it's kind of like it's a bunch of things you're seeing in your head, I guess.
Phantasmagoria.
Interested. So I guess we're having a phantasmagoria of a bunch of stuff happening in the stock market, and we're trying to make sense of all the shifting or deceptive prices. Like SoFi earnings was pretty deceptive. Thought it was amazing, triple beat, and then it crapped the bed. So I guess that was a phantasmagoria, but that's a good one. That's a good one to use if you're ever talking about a shifting illusion or deception in anything that's happening. Amit is drunk. Go get sleep. TJ, the wheel deal. What's up, bro? It was fun meeting you in Vegas. Oh, let me share this last thing before I end it off. I did a little thread on X If you're not following me on Twitter, go to Twitter, follow me. Here are some photos of Vegas on fun. Sleep deprivation causes phantasmagoria. Yo, literally that Lunar, that's the best way. That is the best way to use that word today because that's what's happening. So there's me, Chris, and Carlos at the airport together. There's a bunch of us, Prakash, Carlos, the other Amit Patel, Garcia. There's Amit holding Amit, like Jack and Rose and Titanic. There's Davis, Stephanie. We got a bunch of people that Top Golf, Scott, my guy, Zocold, Heinze over there. It was fun. There's a bunch of photos. You guys can follow me on Twitter. I'm just gonna put this in the chat. You guys can check out the photos. But it was fun. It was a really good trip. But you know what I hated about the trip, bro? What I hated about the trip is that it took away time from work. And yeah, you can make the argument like, yeah, you got to take some time off. Dude, like, I don't want to go 5 days without posting a video. I don't want to go days without streaming. I don't like that shit. We didn't miss a market open stream because we did Friday and we did yesterday and we're here today. So Saturday, Sunday, we don't do a stream anyway. But I just, in general, I don't like not working at all. I think maybe next time I'm going to do it for like 1 or 2 days versus 4 days because I don't like it, bro. It's not fun when you get back. Like I was looking so forward to getting back and then the fucking flight gets delayed, 30 times. And you're like, all right, well, work will still have to be, and you can't work at the airport because you're already sleep deprived. So like the intellectual rigor it takes to like start doing stuff. The only work I was doing at the airport was just tweeting. I was like, all right, let me just tweet as much as I can about different stuff going on and try to get that out there. But bro says that like he doesn't miss Palantir Weekly every other week. Dude, we missed it for 2 weeks. We've done 97 episodes. That's almost 2 years. We missed it for 2 weeks. 1 week, I was just really tired. And then last week was Vegas. But we'll be back on Friday to cover Palantir earnings. And the craziest thing, bro, is like Palantir earnings is this week. And it doesn't even feel like Palantir earnings are this week. Like literally earnings are on Thursday. And because I guess I've been gone for the weekend, I haven't even felt like I've like been mentally ready for earnings that are coming up November 2nd. So it's going to be an exciting week, busy week. I'm going to go sleep for a little bit, wake up, get back to work, get to the grind and keep it going. But yeah, that's it. Thank you all for being here. Thank you all for joining for the market open. Thank you for joining on Friday with Chris and Carlos and everyone. I hope that was a good moment for you guys. And yeah, one of the things I also took away, I guess last thing I'll say is the show must go on in the context of like, I just love this idea of no matter what happens, like don't stop the show. Just don't. And that's I guess a metaphor for anything in life, right? Whether it's going to the gym, whether it's like trying to keep building, whatever you like, just don't stop the show. I know it's cliche, Wolf of Wall Street, right? The show goes on, but like it's like doing a show consistently or doing something consistently is a good feeling. Doing it consistently in the face of adversary. And I was about to say adversity. I was like, how do you say that word right now? Doing it in the face of obstacles is what makes the consistency even more fun, right? Because then it's like it's really testing yourself. Like, yo, like you don't need to do this. People will understand if you don't do this, but if you do this, how will it feel, right? And like that, I think is the fun part about being inside of a zone in a process and trying to see how far you can take it. So that's it. Thank you for everybody. Have a good Halloween. I will see you tomorrow on the market open and we'll go from there. Have a good one, guys. Bye-bye.